We detected an unusual trade worth $1.2 million on Sabre stock, ticker symbol SABR. But here's what makes this even more interesting. Sabre is scheduled to report earnings in 2 weeks on November 5th. And so in this video, we'll break down this unusual option activity to figure out whether this wealthy investor is bullish and buying, expecting the stock to move higher, or bearish and selling, expecting it to drop lower. Because as we all know, the rich have more access to exclusive research and information, sometimes even leaked insider information, giving them an edge to make better, smarter financial decisions. This is how smart money always stays one step ahead, well before the rest of the market catches on. No wonder the rich get richer. And so, to level the playing field, let's dive into the unusual option activity to gain insights from the rich so that our subscribers and members can profit from this deep knowledge too. As we can see here on the options time and sales tape, there was trading activity on October 22nd at 11:33 a.m. in these November 21 options at the 2.5 strike calls. However, these options were not as unusual or significant as another trade that stood out later in the day. Our system detected something far more unusual in the final hour of the market at 3:22 p.m. in these November 21 options at the 2 strike calls. That's why we focused on these 2 strike calls instead of the 2.5 strike calls. And in just a moment, we'll show you exactly why. And we can see that these 2 strike calls were being traded at a price of 43 per contract. Keep in mind that options are priced per share, and each options contract controls 100 shares of stock. So to get the actual dollar value, we multiply by 100 or simply move the decimal 2 places to the right. That means each of these contracts cost $43. And so to calculate the total cost this wealthy investor spent, we multiply the price per contract by the total number of contracts traded. And so, how many contracts did they trade? Because it's not just these hundreds of contracts that you see here. There's more than meets the eye. That's why we always take a closer look at the data to improve our accuracy, increasing our probability of profit. So to find out how many total contracts were just traded, let's first check how many contracts existed before this unusual trade was made. This is the historical data from October 21st, the day before this unusual option activity happened on October 22nd. And so, looking at the November 21 options at the 2.5 strike calls, there were 522 open contracts in the open interest, while the 2 strike calls had 1,942 contracts, or about 2,000 open contracts. Now, if those contracts that were just traded on October 22nd are new opening contracts, then the open interest should be more now, adding to these previously opened contracts. On the other hand, if those contracts were closing contracts, then the open interest would not increase. This data is very important to confirm because it strengthens our analysis, and that in turn increases our probability of profit. Because if a wealthy investor is closing out contracts or trades, it could mean they're worried about that stock. So maybe it's not the right time for us to jump in. On the flip side, if a wealthy investor is opening new contracts, it could signal an opportunity for us to start a new trade. So let's verify this by checking the updated data on the option chain for the same November 21 options at both of these strike prices. And we can see here that at the 2.5 strike calls, the open interest has now jumped to 14,000 open contracts, while at the 2 strike calls, it has increased even higher to 31,000 open contracts, a more significant increase from about 2,000 open contracts previously. This is why we focused on these 2 strike calls because that's where the larger and more meaningful trading activity took place compared to the 2.5 strike calls. This data also indicates that this wealthy investor opened new trades since these contracts were added to the existing open interest, increasing the total number of open contracts. This is why we always take the extra steps to verify the data at a deeper level. Many other websites and scanners simply flag every high volume options trade as unusual without filtering out closing trades. That's what leads to false signals, wrong conclusions, and unnecessary losses for anyone following unusual option activity. But our deeper analysis filters out those false positives, which is why we consistently find more accurate and profitable trades than other websites. And in this case, our deeper analysis confirmed that this was a new trade opened by a wealthy investor, not a closing trade. Now, keep in mind, some of these new contracts could be other traders jumping in, including ourselves and our members, but the majority of these new contracts were opened by this wealthy investor we've been tracking. And with this kind of size, they're making a strong directional bet and putting real money on the line. How much? Well, let's do a quick calculation. Since we currently have about 31,000 open contracts, we subtract around 2,000 contracts that were previously opened, which equals about 29,000 new contracts opened. Next, we estimate the cost of this unusual trade by multiplying this number of new contracts by $43, the same price we saw on the options time and sales tape. And this equals a total trade size of approximately $1.2 million for this unusual option activity. But keep in mind, just because a trade is large does not necessarily mean it has a high probability of success. In fact, this one carries more risk than the smaller, more selective trades we share on our website. And so if you want to get access to those lower risk trades with a higher probability of profit, then go to our website. We'll put a link here. And if you join the membership through our website instead of YouTube, you'll also receive additional trade alerts by email because YouTube does not share your email address with us. So if you want more opportunities to profit, make sure to join the membership through our website. Keep in mind that our members also get earlier access to trades like this before anyone else, even before we share it with the public. So if you're tired of being late and want more time to act on these opportunities, just head over to our website, where you can see exactly which stocks wealthy investors are trading on Wall Street and when they're doing it, so that you can have the same opportunities as the rich. Because if the rich get richer, why shouldn't you? With that said, even though this trade carries higher risk, we still took it, but we used position sizing to manage our risk. As you can see here, at the 2 strike calls, since this was a new opening trade, we also bought these call options and entered the same position here, marked as POS, which stands for our position, and the green color indicates a buy position. Because, based on our deep research across multiple variables and data sets, this wealthy investor bought these 2 strike calls for about $43 each, the same price as we saw earlier on the options time and sales tape. And so, when we analyze this trade, we can see here on the risk profile graph where the profit or loss shows up here, and the x-axis represents the share price of the stock, which is currently trading over here, and the y-axis represents the amount of profit or loss. Note the zero break-even line over here. And so when the purple line, which represents the current date, and the blue line, which represents the option's expiration date, are trading below this zero break-even line, as the share price goes down, this trade becomes more negative, more loss. And as the share price goes up, this trade becomes more positive, more profitable. In other words, this trade is going long bullish on Sabre stock. We can also confirm that by checking the options Greeks. This trade has a positive delta, which means it's positioned long and bullish. If it was a short bearish trade, we would see a negative delta instead. But keep in mind the risk with this trade. It has a negative theta, which means it loses value over time due to time decay. And that is why you can see here, the purple line drops down lower to the blue line as we approach the option's expiration date. Since these options lose value through time, the break even on this trade moves higher as time goes on. And so you can see here, even though the call options we bought have a strike price of $2, the stock needs to trade above $2.43 per share for this trade to be profitable at expiration. Because of this added risk, along with other factors, we only took a small position in this trade. We do not invest a lot of capital into these higher risk trades. Instead, we focus most of our capital on lower risk, higher probability of profit trades, the kind of trades we share on our website. We'll put a link to our website here where you can also learn more strategies to increase your profits. Let us know in the comments, do you think Sabre stock will move higher or drop lower? As always, please like, subscribe, and until next time, let's keep tracking the trades of the rich so everyday investors can profit too. Take care and have a wonderful day.